The future of the US economy continues to look bleak, with inflation soaring and the hapless Biden administration only making the situation worse with a mad spending package. Business commentator Terry McCrann wrote, "Be afraid, be very afraid. Your economic and financial future is in the hands of an incestuous combine of the most spineless and most incompetent people on the planet on the one hand and the greediest on the other." I'm now joined by the best in the business, Terry McCrann. Terry, you wrote just brilliantly in The Australian about the inflation crisis in the US and the Federal Reserve Board's incompetence. Will this foolishness, if you want to call it that, impact Australia in the long term?
Well, I think it'll impact Australia pretty much in the short term, Rita, obviously in the long term as well. But let me just explain that opening comment that you referred to. The spineless people, the incompetent people, are the US Fed, which has not seen the inflation that's developed in the US, has done nothing to try and fight it, and is way, way behind the ball. And the greediest people are all those investors, those brokers, those main chances on Wall Street who just want more and more money, which they get from these zero interest rates, basically free money, courtesy of the Fed.
Yeah.
So that's the combination that we all have to be afraid of. And the impact on Australia will impact in two ways. One, most directly, if at some point we do get some reality breaking out on Wall Street, either because of the reality just on Wall Street or because the Fed actually tries to do something about the inflation that's now running amok in the US and sends interest rates up sharply, that will directly send Wall Street plunging. And as we know, time and time again, if Wall Street goes down, we do as well. So that's the direct impact. The indirect impact that comes from just the disruptions and mess in the global economy.
Well, tell me a little bit more about this relationship between the Federal Reserve Board and their Wall Street mates, and what it means for the US economy and for the average person who is not a Wall Street multimillionaire.
Well, the simple answer, Rita, is they put Wall Street ahead of Main Street. They're much more focused on making sure that nobody on Wall Street loses money, rather than out there in the real world, the 330 million Americans that actually try to get by, many of them earning only $15 or $20 an hour in their pay packets, if they have a job. They're much more focused on the people that are earning $1,000 an hour, $10,000 an hour on Wall Street. Heaven forbid that they should run into any difficulties. Heaven forbid, this is the Fed, that they don't keep making more and more money, getting bigger and bigger bonuses. And when you say the Wall Street Fed on one hand and the people on Wall Street on the other, no, they sort of totally mixed up and linked. I mean, they go from one to the other. For 3 years, they might be in the Fed, and then they go back to working on Wall Street. So it's just an utterly disgraceful situation where that focus is purely on doing everything possible to make sure that the Dow Jones index doesn't go down, rather than what's actually happening to the lived reality of the lives of ordinary Americans.
What you're describing almost sounds like some sort of a Ponzi scheme almost. You've got the average American being sold out for the rich elites.
Well, that's exactly it, Rita. That's exactly it. I mean, it's extraordinary how close the relationship is. And they live in a bubble. I mean, you have a bubble which goes from Washington to Lower Manhattan and out into Long Island, and particularly the eastern end of Long Island, which is where all those massive estates are located. So they live in this world where they don't actually know what the lived experience of people out there in the real world is. Now, that's in a sense America's problem. Our problem is that we pick up the shockwaves from it. If Wall Street, we've got a bubble basically in Wall Street. We've got a bubble in Australia, both in our share market and in our property market, because our interest rates are also essentially zero. And this is totally unrealistic. It just cannot be sustained. And at some point, it has to be pricked. And it's either going to be pricked by the Fed in America, our Reserve Bank, raising interest rates, and suddenly people who are paying $1,000 a week on their mortgage suddenly find themselves paying $2,000 a week, or more likely $5,000, even higher figures than that, when interest rates go up. It's either going to be pricked by that action or it's just going to blow up on its own accord. I mean, you cannot keep getting the sort of rises we've seen in the share market and the property market over the last two to 10 years. It's not just the 2 years. That just can't go on forever. And at some point, it's going to blow up.
And of course, not surprisingly, Joe Biden seems to be clueless about what's happening. He said earlier this year that, yes, inflation will increase marginally and then go down again. Let's have a listen.
Talk of inflation. The overwhelming consensus is going to pop up a little bit and then go back down. No one's talking about this great,
Oh, Terry, I mean, the man is just out of his depth, and what's
it's Rita,
this new spending package?
He was actually right when he said that, because the Fed was saying inflation's. It's exactly what the Fed was saying. As prices were rising all around them, the Fed was saying, "What inflation? We don't see any inflation." And then a couple of months later, they said, "Oh, well, you mean that inflation? Oh, that inflation's only temporary. It's going to go away." And they are still saying that. They are still saying that the inflation they've got in America, gas prices, which is their petrol, at prices at levels Americans haven't seen since the 1990s. They still say it's going to go away. And then you've got on top of that the Biden administration wanting to spend trillions of dollars of new money, which the administration says is not going to cost anything. It's going to be free. We're not going to raise taxes to cover.
He wasn't right, Terry. He was, as always, very wrong. Yes, he was parroting what the Fed was saying, but they were both
indeed
wrong, and the stats bear it out. And you're right, this new infrastructure package, they call it, the $1 trillion spending bonanza. I mean, there's going to be a little bit of inflationary pressure there, you would think.
Well, indeed, Rita. It's got very little actually to do with infrastructure. There are all sorts of woke spending programs that are involved in that spending. The sort of things that people might think of as infrastructure, like roads and schools and hospitals. Maybe half at tops is going to be spent on those things. The rest of the money is going to be spent on all sorts of social welfare and woke programs.
Yes, Terry McCrann, thank you for your time this evening.
Thank you, Rita.